committee is aware of this and what we can do as a town to, resolve that and, or get someone that can be 100% committed to finance if we can, with all of our issues with this sheriff contract and so much, so on and so on, because there's work to be done, but one person can't do those two full-time jobs. So thank you.
Okay, thanks, Rita. I think we can talk about that during the budget update. Because there's more than one person, so we'll cover that, I think. Thank you for that. And can everyone hear online now? Sorry about that. I think we had them.
We can now. Thank you. If you could repeat what the person who just spoke said, that would be cool. Thanks.
Yeah, Rita had some, for items not on the agenda, concerns about contractor spending and how much money we were getting back, and also concern about a finance director now wearing two hats as assistant town manager as well as finance director, and staffing related, focus related. And I think we'll address those in the budget agenda item, which is item 5B coming up. Okay.
Thanks, George.
Good thing. Moving along, let's see, announcements, presentations. We don't have any. Minutes of the meetings. You'll note that our last meeting was quite a while ago in January 27th. I hope everyone's read the draft minutes, and we'll entertain a motion to approve.
I move to approve.
Second?
Second.
All in favor?
Aye.
Aye.
Aye. Any opposed? Okay. Minutes are approved. So that's item 4. And we now are on to new business. The first item here is an audit update on, where are we on the very important audit sort of catch-up task that we've been on for a considerable period of time here. With that, I will ask Tony to tell us where we are, what issues we have, and what the schedule looks like.
Okay, so I did receive the draft for the fiscal 22-23 audited financial statements yesterday. We still now have to prepare the MD&A and confirm the footnotes. And we'll have that back to the auditors before the end of the month, and then have it back to Finance Committee sometime in June, and have it reviewed by the Finance Committee, and hopefully bring it back to the council the second meeting in June. With this delay, it did push back our audit schedule. We'll probably have the 23-24 audit done by September, and then have pro forma financial statements for 24-25 and 25-26. These will be unaudited financial statements. However, the last 2 fiscal years, with the improvements we've made in our posting of financial transactions, these are going to be very clean looking financial statements. And they will be reasonably assured that they will represent the fair condition of the town of Portola Valley. They will be unmodified opinions, as we will be receiving for 22-23 as well. But that's kind of the update for the audit right now. But the issue was, we had a $300,000 balance they had it classified in one category. I had it classified in another. We were pretty close to a disagreement, but we worked it out, and they presented the draft to me again yesterday.
Tony, quick question. You said that so 23-24 September targeting.
Yep.
And then pro forma not audited for fiscal years 24-25 and 25-26. When would those be expected?
Those will be around the same time. Yeah.
So this $300,000 difference, did that go to the reserve or not?
Well, I had it in the reserve. They had it in, which meant their liabilities were overstated. Or I'm sorry, were understated, and our reserve was overstated. It was the other way around. So,
I'm sorry. So which way did it improve?
So it's how the balance I had for fund balance was correct.
And that was to the positive for us,
Actually, it was to the negative to us.
negative to
Yeah.
us. Okay. So they were overstating.
Yeah, they were overstated. Yeah.
But that didn't affect it in any, showing us for the past,
No.
Yeah.
Yeah, no, the change in fund balance was still 1.25 million, which was a reduction from 22-23 or from 21-22. So, but moving forward, I mean, we're still looking at for 23-24, we're still looking at use of consultants, sheriff's contracts. There's going to be another decline or deficit in 23-24 as well.
When do we expect, when we're going to have 24-25 pro forma, when do we expect those audits to be finished?
Well, 24-25 will target for September to
Okay.
have at least a draft or the complete package. But then 24-25 and 25-26, those financial statements will be in pro forma, but they'll be available and posted.
Right.
So, at the same time
But the audits will finalize sometime
in
fall?
26 or 27, probably 2027.
Okay. If there are no more clarifying questions from the committee, I'll open it to the public for any questions. You're in the room, online.
One clarifying question.
Yeah.
Any substantial findings?
No,
Okay,
it's still the
other-
same. It's still the same. The memorandum of internal control has just changed from 21-22 to 22-23. The issues that were present back then, they've been corrected now. But for that fiscal year, they were still an issue. But again, they've been corrected for 24-25 and 25-26.
Right. Okay. Okay. Thank you.
Any questions, comments from the public online? I don't see any hands raised. Okay.
There's Betsy.
Actually, I am raised, yeah. Thank you for
Oh, thank you.
recognizing me. Thank you.
I'm sorry, I didn't see you.
I noticed, but thank you, Tony. I am reflecting right now. I will say I'm disappointed. I'm sure I'm not alone. I'm reflecting on a time, it's been some years ago when I heard the committee ask how they could be helpful without being annoying. And I'm recalling that now because I thought it then that we'd misidentified the problem, since what we have at stake is larger than anyone's perception of you or us, and that the power you choose to exercise in the next 4 months matters a great deal. In that spirit, I had a couple of ideas for ways that we might be able to impact and accelerate the production of audits. One would be, had our auditor been here today, I think the exchange that we would have had around this issue would have contributed to our collective understanding. Tony, you're awesome, and I believe in a village understanding right now. So an alternative to that would be to form an ad hoc audit subcommittee of 3 of you to continue meeting with the auditor until such time as our audits are fully up to date. And particularly since we're looking now at a delay that takes us fully into next year after the important ballot initiative. Secondly, the town council committees do have the power to schedule meetings. And in light of the last 4 months that have transpired where we've had scheduled and then canceled meetings that have left the residents kind of hanging, if you will, I really look at the opportunity to see regular finance committee meetings at which you share with the council and residents a bolstered view of the progress that's really foundational to establishing or reestablishing our financial credibility and transparency. I want to underline that Tony walked into this after, all these problems had fully matured and developed. So thank you, Tony, for signing up for being a part of the solution. I'd really like to see the finance committee step in more importantly. We could use more robust communication with the town right now. Thank you. And thank you all for stepping into this too.
Yeah, thanks, Betsy, for the commentary. Just my own view for whatever it's worth, and then we can get to the discussion here, unless other people have comments, is I meet with Tony at least monthly, sometimes more than that at length, and the audits are always a top concern and discussion, and continually exploring how we can accelerate things. And the view till now has been, the limiting factor has been the auditor's time and their ability to deliver things. We were on a schedule, but as Tony just mentioned, the auditors came up with a different number that was substantially different from what he had come up with. And in the end, his viewpoint prevailed, but that took considerable time. And so with the audit only arriving yesterday, there was no way with public notice and view that we didn't want to reschedule yet again, but the rescheduling was totally determined by the auditor's timing. And I don't know, Tony, if you have anything to add to that.
Yeah, I mean, I'll go 50-50. I mean, we also have to respond to their requests, and when you're in the middle of budget, fee schedule or fee study, and also taking on additional duties, it does kind of have to reprioritize some things. But I mean, the audits are still number one. I mean, as you and I both know, every conversation we've had is the first item on our discussion. So, but I'll go further when I talk about the budget, about the plan for next fiscal year.
Great, that's helpful. And I don't believe, with all due respect, Betsy, that an ad hoc committee would really add much to what we're doing. I have offered to all and sundry that, if it were helpful for me to use my vast authority to lean on the auditors, that I'm happy to do so, but it actually would have been counterproductive, I think, because pretty much the agreement in these things.
We are one of many clients.
Yeah, exactly. We're small client. They're doing their best, and what I'm very hopeful for, and I know hope is not a strategy, is that the next two after this one gets put to bed should go much more quickly, because we've gotten through the thorny issues that are sort of legacies of the whole COVID period that kind of messed things up, and now it get into much more routine. I know that everyone appropriately out there would want to be shown this rather than just told this, and fingers crossed we'll be able to do that very soon. I'll open it up to the rest of the committee here, not seeing other hands. Any discussion on this matter?
To follow up actually on Betsy's suggestion on how to improve the speed of the audits, we're here in Silicon Valley. One of the topics du jour everywhere is the either application or misapplication of AI. Just in the business where I work, we are starting to apply AI models to facilitate the speed of processes, including financial reporting. There is this tremendous risk around AI hallucination and other things, so it doesn't remove people from the process, but it can really, these types of tools we have found can really augment. I'm wondering if that's being explored, or whether that is not something that would be appropriate for the state where we are now.
OpenGov is implementing AI in all their modules, so we will look at it to see how we can take advantage of that. But we're part of the implementation of expanding planning and building into our permitting and licensing module is the AI component. So if that works, then we'll look at expanding it into the financial and budget module.
Just one word of caution there, because this is happening on occasion, where including with government filings, that if there's not a human judgment applied to whatever the final outcome is, it can lead to really bad outcomes. So it's kind of just a word of caution as it relates to to actually implementing AI efficiencies. The ultimate product needs to be reflected and frankly judged by human beings that are responsible ultimately to the constituency.
Correct.
Just in light of the fact that I guess we'll be going to the voters in November, and ideally we're up to date with our audits, and it looks like we won't for 24-25. What information will we be able to share? What kind of confidence will we have at that point in time prior to the the vote. Just so, I mean, when you're asking people for money, it'd be nice
Right.
to have a good sense for our financial situation.
Well, the pro forma financial statements for 24, 25, if the audit is completed, we'll have 24, 25. I'm sorry, 23, 24, we'll have that audited. 24, 25 and 25, 26, there'll be pro forma financial statements. My confidence will be extremely high that they will actually represent the financial condition for the town.
And what will that look like in terms of conveying the level of confidence to the town in advance of the vote?
I'm not exactly sure how to answer that, other than it's going to be my word. And I think I've demonstrated to the town that, you know, I'm a person of integrity, and that it'll be a fair. It'll be, I mean, the auditors will not have any issue with the numbers that are going to be presented. And it'll be an unmodified opinion. But it's just going to be my belief and just my years of experience that, I mean, I've done this for 25 years and I've had 24 years of unmodified opinions. So, I think I've demonstrated that I know how to put a financial statement together. The only thing that's going to be an issue is the GASB adjustments with the pension liability and I mean, we'll have those numbers. They just won't be the final document or the final product, but it will be, this is our operating reserve as of that date.
Thanks.
More discussion on this item? Okay, seeing nothing, we'll move to item B, which is our budget update and discussion. This may actually bleed a little bit into C because part of the fee schedule implications might be relevant to the budget. But we'll certainly discuss the fee schedule separately in detail. But I'll have Tony kick us off on the budget update and discussion of where we are right now. Okay. Thank you, George.
Oh, no, this is, people are having problems with this meeting.
You can just copy and paste in the web browser.
Yeah,
That
it
works.
worked
That
for
works
me.
just as well.
Yeah. Yeah, I'm hearing
And-
for those online commentary that some people are having difficulty accessing the Zoom link. I logged in here in the schoolhouse and also before I came over just to make sure it was working.
I did too. I got here at 3:30 to make sure it was working.
So I'm confident that it's working. Of course, some people may be having IT issues, but many people are online. So okay.
For what
I
it's
know to do.
worth, I can hear you guys.
Great. Thank you. I appreciate it. Okay. We'll let Tony present on the budget and share the screen.
Okay, so we did have our audit update, and now we're going into the budget update, following up with the fee study. So here's a fund balance update as of April 30th, 2026. Revenues for the general fund were 6.4 million. Expenses to date are 5.6 million, so we're running an $808,000 surplus. However, this was before the, if you saw the last warrant list, we had the $1 million check to the sheriff's office and some consulting costs as well. So that number is going to go down significantly in May. Also, reminder.
Sorry, we don't have this, right?
No, I will send it to the rest of the committee.
Okay, so
Yeah,
you just,
yeah.
it's a fresh update.
This is fresh, about maybe an hour ago.
Fresh. All right, thank you for the
Yeah.
freshness.
Yeah, so then looking at the restricted funds, revenues of 2.5 million, expenses of a little bit under $1 million. The fund balance is 20.47 million as of April 30th. General fund is 3.72 million. And then looking at the road maintenance districts, 161,000 in revenue and 85,000 in expenses, leaving a fund balance of 76,000. So the question came up about Fund 701, which is our applicant deposits. For the year, we've taken in over $861,000 in revenue and expended $611,000 to date. So that's a surplus of almost $250,000 just for the current fiscal year. And now these are just the fund balance. This isn't taken into effect the cash balance, which I'm going to show in the next slide. So the cash balance update as of April 30th, general fund is 3.4 million. Restricted funds is 21.74 million. And the fiduciary funds are a little bit over $1 million. Looking at Fund 701 again, has an ending cash balance of 1.28 million. And those are monies received from applicants. I mean, it's not just Stanford and the Priory. Yeah. 3056.
Oh my God.
Okay. So our ending cash balance is 26.23 million. So looking at the general fund, somebody's got their speaker on. Testing. Okay, so the echo's gone. So looking at the individual departments, again, the budget is 8.2 million. We budgeted a deficit of 263,000. We are currently running a surplus of 808,000, again, as the end of April. We're pretty much under budget in every department. And then on the next slide, I'm going to show by category, revenue category and expense category, just where we are in regards to the general fund budget as of April 30th. So looking at revenues, we budgeted 7.95 million in revenues. We have actually 6.43. So about a remaining 1.5 million in budgeted revenues. We're running about 81% of budgeted revenues. So we're pretty much on track for the year. The largest increase, although it is the smallest dollar amount, is fines and forfeitures. We're 400% over budget. And then, but property taxes, we're at 84%. Sales and use tax is 76%. Now with sales and use tax at UUT, we're actually lagging. We'll actually receive June's UUT revenue in August. So that's going to be an accrual. But we're pretty much on track with revenues for fiscal year 25-26. And then on the expense side, we're pretty much under budget. Contract will go up with the sheriff's contract. And then the remainder is the other county provided services, dispatch, and also some fire service and the town attorney. With consultants, we're about $293,000 under budget. But so we're at 68% of budget. We're well below, but we're still going to end up about 8.2 million by the end of the fiscal year. So we're right on track with what the plan has been, the $263,000 deficit, but we might end up below that by the end of the fiscal year. So looking for developing the 26-27 budget, some items that we've already gone over with council. We received direction to budget to a 2.5% COLA in the salaries for employees. It's going to be about a $51,000 cost there. Other organizational adjustments we will be making with my promotion to assistant town manager. We'll be looking to fill former duties with the finance manager. Finance will still report to me, but the finance manager will be handling the day-to-day operations of the finance department, but still have oversight from me. We're also looking to add a position of accountant one, not necessarily increase the number. It's just looking at our organization. There's no career track. So it goes finance tech to senior accountant. So there's no ladder or a career ladder. So we'll be adding the accountant one position to the salary schedule. And then also looking at building and planning. We're looking at adding a senior development review technician / building inspector. Again, these are needed to provide a little bit more flexibility in the services that are being provided by building and planning, and also to put some type of career ladder track. Hopefully that will help with recruitment and retention for staff. The sheriff's contract, it's been well publicized. We're looking at a $508,000 increase to the general fund alone. This is on top of the current $263,000 deficit for 25-26. So we're looking at a pretty significant deficit for 26-27. And even though we are in the process of completing the fee study and anticipating some additional revenues from the fee study, it's still not going to be enough to cover the big increase from the sheriff's contract. Also, there's some other funding needs that some are partially funded, others we're still kind of developing how much money or how much budget will be needed. But these will be conversations that we'll be having for the 26-27 budget. That's the storm drain master plan. We haven't had one done in over 50 years. Actually, I'm sorry. Yeah, it was done when I was born. The Hawthorne development, that's coming up fast. Mid-Penn would like to put a parking lot at the top of Alpine and Portola. And council and the school district are pretty heavily interested in how this project goes forward and what the town can and cannot do, and also in conjunction with the school district. So there's going to be some additional costs that are going to be borne by the town, and we'll be having that conversation in June, just how much we're going to need to fund for this. And right now, it's a general fund. As from my point of view, it looks like it's going to be coming out of the general fund. There's also the Valley Oak Trail bridges. This has been an ongoing project that is becoming more of a, these bridges were damaged in a storm event back in 2024, or I think it was earlier than that, my apologies. And we've been going back and forth with our insurance company in regards to, do we have to repair the bridges? Do we have to replace the bridges? And then also over the past fiscal year, there's the Ford Field bathroom and the town courts that were, again, deciding on how to fund these projects. Right now, we're currently doing a feasibility study with the Ford Field bathroom just to actually determine how much it's actually going to cost. There is a grant that we received from the state parks that will cover some of the costs, but the initial application was based on cost estimates from about 2020. So we're anticipating that there will be some significant cost increases for that project. And then also with the town courts, it's kind of gone to a little scope creep in regards of what we need to actually do with the town to resurface the town courts. But again, these are all funding need conversations and discussions that we're going to be having with the budget. Also, the ballot measure. Regardless of the outcome, we will be bringing a revised budget after November. So it's either going to be we receive new funding and we can fund some of these things, or we're not receiving the funding and we'll have to make some significant cuts. So again, part of the working plan is the audits, 23, 24 through 26, 27. Housing element is still an issue for our planning and building department. The fee study, as we talked about earlier, we're looking at about $100,000 projected net increase in user fees. And then we're also looking at enrolling in employee relations management insurance. This is going to help us with training compliance. And then if there's any personnel issues, workplace investigations, that we can, it's part of our existing liability insurance, property insurance. This is just another form of insurance to help with compliance with labor relations and any other employee matters that present itself. So that concludes my report. I turn it over to the committee for questions.
Great. We'll start with clarifying questions from the committee, then go to the public, then we'll come back to us for discussion. One clarifying question I've got is just with respect to our current budget with about 16% of the fiscal year left, we've got a surplus. What expenditures are coming up that turn that into a deficit?
Well, the sheriff's contract alone, that was $1 million right there.
And that's payable in the next couple months?
Well, it was payable May 11th, or the first warrant list in May. So that wasn't, in fact, that wasn't included in the end of April numbers.
Okay,
So,
got it.
yeah.
Good. Just
And
for
then-
anyone out there
right.
looking, saying, hey, we're doing fine.
Yeah. Yeah. No, we're on track to end up in a deficit. Unfortunate.
So while we're on track here, can we also talk about the $508,000 increase in the sheriff's contract? That's 20%.
Yeah.
Approximately. Can you tell us a little bit how that happened and what, was that negotiated or was that just told us?
So over the last 3 fiscal years, we've relied on credits and one-time funding sources to offset some of the costs to the sheriff's contract. Those credits expired this fiscal year. The one-time funding expired. So we kind of been kicking the can down the road in regards to the general fund's cost of the sheriff's contract. And this year, it's all being absorbed by the general fund.
So I'm confused. When you say sheriff's contract, in the past, we've said the contract is the contract and then there are credits that we get.
Right.
We negotiated with them and then we got
Right.
some credit.
Right. So for
Contract, are you saying that the contract is increasing by 508,000 or that the general funds portion of the contract is increasing?
it's the general fund's portion of the contract, because the credit that expired was 211,000 for 25, 26. And then there's also there is a cost increase of about 8% from the prior year. And there was also, I had this, but then also we were using ARPA funds as well of about 100,000 for 25, 26 as well.
Right. So forgetting for a moment the general fund, the town only has you said an 8% increase
From the previous year, yes.
previous years.
Yeah.
So that's well within your 10% estimate that
Yeah.
you did earlier.
Mhm.
Thank you.
If you back on the looking at the current years, the current fiscal years, where we are in the budget versus actual, in looking at the revenue side, it looked like the biggest gap was in property taxes, which my recollection was about 700,000, of which we've collected 86%
Mhm.
of the budgeted. Is that, when were those numbers as of?
As of April 30th.
As of April 30th.
Yep.
And then, so I know that we pay property taxes. They're technically due February and November, but then you have this penalty after April and December. So at this point, but how do you recognize the property taxes over the course of the fiscal year? Will that gap from 86% close to 100%?
Mhm.
Oh, so it's kind of like you do it on a monthly basis.
Yeah, there's there's other components in the property tax. There's ERAF, and then there's VLF, and then, but then there's also the residual payments. Some folks do pay late, so we do get property tax remittance from the county monthly. Sometimes, but the big months are November and March, or November and April, excuse me. But then VLF we get in May, or no, we get in June because, not VLF, ERAF, because schools have to report by, I believe it's by the end of April. And then whatever the surplus is then gets redistributed to the town.
Hey, Tony, a follow-up question on property taxes. So it sounds like you're confirming that we're on track to the budget from a revenue perspective for
Yes.
property. And can you remind me year over year how that was, 24, 25 to 25, 26?
Well, the assessed value increased 5%. Yeah, it's a little bit over 5%. So that, the secured portion went up, unsecured actually went down. But, we're on a teeter plan. So the county, if it's the secured portion, the county pays us whatever the levy is. Unsecured, it's whatever's collected. Opter is whatever's collected. But the only one that gets confirmed is the secure levy. The other components of property tax, ERAF, VLF, those are distributed by the county. And I'm conservative on my estimates with those amounts. But like I said, we get a ERAF twice a year. And so that kind of also plays into, but it's a 5.4. I think it was a 5.4 increase from year to year.
What I'm trying to reconcile, and I just couldn't find in my notes, was when we got into these budget discussions a while ago, one of the causes of our deficit was lower than expected revenues because home sales were not happening as frequent. And there was all that good work done, I forget, by the consulting group who we worked with. And then therefore there was a forecast put together.
Yeah.
And I'm just wondering, how's it going, right? Relative to that forecast, because we said our plan, we're banking on that forecast being good. And I don't know, are we tracking to what the consultant said? Are we below? Are we above?
We are. Home sales are, I think we're already over 50 for the year.
Right. So that means home sales are up.
Home sales are up.
Values are increasing.
Right. So
faster
the
than-
transfer, another part is the transfer tax, and
Right.
we're actually higher than budgeted.
Right. So I would expect that our revenues related to property should be higher than forecast significantly.
Right. I had budgeted a 4% increase in property tax.
Yeah.
So
And you're saying we're coming in at,
we'll be right there.
yeah, that doesn't sound that exciting, 4%.
Yeah, well-
Everything that you said.
Well, Prop 13 caps 2%.
No, I understand.
So
but
we're actually,
tax, transfer tax,
Yeah.
reassessed value. I know reassessed value comes next year,
Yeah.
right?
yeah, and then what also plays into that is the remodels. If they're significant, then they'll trigger a reassessment as well.
Yeah, so, and maybe it's more of a question for next year's budget, but it sure seems like we're out of the doldrums of property tax revenue because of lack of home sales, lack of remodels.
Mhm.
From what I can tell, home sales have increased dramatically. Remodels are going on actively, so we should we should be able to step up our forecast for revenue.
True. The median value has fluctuated up and down, but the median value is still higher than the assessed value. So,
Right.
So we're always going to have an increase. There's always going to be a gain in the transfer tax with the home sales selling higher than the assessed value, especially if it's, if the home if it's like a 30-year home ownership or a 40-year home ownership.
50 homes,
Yeah.
right? Getting, step up assessments
Mhm.
is a meaningful
Yeah.
number, in
Right.
my opinion, for future revenues.
Yeah, and Paula Cohn, Cohn and Cohn is the
Portico. Thank you.
So one of the reports they give us is a breakdown of home sales. And then also they kind of say, well, this house was owned for 30 years.
Right,
So the assessed value was way down
right.
and sold for $7 million or something like that.
Yeah.
So
So do we get another report from them that will help guide us for
Mhm.
fiscal year 26?
I get quarterly reports from them and then also an annual report that I use to develop the GAN limit calculations. So yeah, we use their expertise very well.
Okay. And so we're trending higher than what we forecasted,
Mhm.
and then you'll reset that again based on their input
Right.
going into 26, 27.
Right, but the conservative part of me is I don't want to say a 6% jump or a 5%. I want to keep the base at 4 unless there's like an extreme spike in property tax revenue. Then I'll move my base up.
Yeah, understood. I just
Yeah.
think we've got to make certain our budget
Right.
shows the reality.
Well, I mean, budget 101, you underestimate revenues, you overestimate expenses. So,
But then what do you do when you're asking taxpayers for money?
well,
You've got to at some point say,
Right.
this is how much I need, and acknowledge that I'm overestimating and underestimating.
right, but now we've got a $500,000 increase.
I
That's
understand that.
that's tangible.
No question we
Yeah.
have to do.
Yeah.
So, okay,
Yeah.
thank you for that,
Yeah.
though.
I have some questions on your March 25th budget update
Mhm.
regarding pension. You didn't mention anything about that in your presentation today. One of the things that's you said the unfunded liability, CalPERS is close to 2 million.
Mhm.
Is that in theory what we could pay in if we had the money? Or-
If we had the money, yeah, we can make additional contributions towards the pension liability. Yes.
So at one time, many eons ago, we reserved, I
Yeah.
shouldn't use that word, we set aside pension amount, what is it, 7 or 8? I can't remember.
Mhm.
I haven't seen that number in a while. Is it 7 or 800,000? I can't remember. It's probably gone now, right?
We did, well, there was two things we did with, there was OPEB.
Right.
We did about 500,000. And I believe the PERS contribution, I believe was about $1 million. And that was back in 2020 or it might have been 2019.
Pre-pandemic.
Yeah, so that was reflected in the 21-22 financials because we ended up with a pension asset, not a pension liability, and we had an OPEB asset. But for 26-27, the employer contribution rate, the percentage has actually been reduced because CalPERS's investment returns last year exceeded their estimates. So our market value of assets was increased. And also the other thing is we have more employees in the PEPRA plan, which is the lower costing plan, than the classic plan.
So the unfunded actuarial liability, does that include OPEB and pension?
No, that's just pension.
So in addition to the 2 million, we have an OPEB liability?
We do, but we also have an OPEB trust
Right.
that pays
Offset.
that's offset now.
So,
And that OPEB trust is greater than the OPEB liability.
so there's an asset
Yeah.
right now. Oh, wow. That's good
Yeah.
news.
Yeah.
So just to clarify, so in theory, if we had the funds, we could prepay this roughly $2 million unfunded
Mhm.
liability.
Yep, if council so directed.
Well, one time we did have money.
Yeah, I know, yeah,
In the Stone Ages, yeah.
yep. Back when the sheriff's contract was $1 million.
So Tony, regarding the budget schedule for 26, 27,
And can we just hold off on that?
oh, that's coming up?
Yeah, well, I mean, what we want to do is once all the clarifying questions are out of the way, want to hear from the public, address the comments Rita already made, and then come back and do the more discussive sort of stuff after we've heard whatever the public is asking too. To kick that off, that part off, I want to just come back to Rita's comments at the beginning, which had to do with contractors and getting money back from contractors. Did you understand? Yeah.
That's why I went over Fund 701. We had the $800,000 in revenue against the 600,000. So that's, but it's not just money from Stanford or the Priory. It's from homeowners and residents who are doing redevelopment projects as well.
Okay. And so does that explain for you where the money's going? No.
Can you clarify?
Yeah, come on up to the microphone, Rita, and let's explain what your question is. I want to.
Yeah, in the warrant list, it added up to about $250,000. And my question was, how much of that do we get back? $250,000. Are we getting back $80,000? Are we getting back
We
$120,000
have,
out of that?
we
And-
have $1.2 million sitting in that fund. We've already collected,
Out of the $250,000
already collected,
at the last warrant list,
already collected.
we got $250,000
We don't
back.
cut a warrant unless we have the money.
There were only 2 of those that had a 701 in it.
Right.
And it
Is-
was partial. It wasn't like that whole bill was, and you can look at the warrant list from the last town council meeting. It's in the packet. But there were only 2. It had like 2 or 3 other funds that were also part of it. Out of those 2, 5 contractor bills. And my question was, how much money did we get back? And of course, I can't see what's behind the numbers. If there's a huge fund with $861,000, it's not saying that, okay, for Cotton Shires, $40,000 of his bill came from the 701 fund. That is
That's-
what I'm really asking.
That's what the report says. There's payment by fund. And there's also a list of,
Have another page that wasn't in the packet.
it's always in the packet. There's
Is-
3 reports in the packet. There's the check register, there's payment by fund, and payment by invoice.
It was like, I'm going to make up some numbers, 200/138/701. It didn't have, okay, from the 200 fund, 10,000 came from that. It didn't have from that 138 fund, 5,000 came from that, or the 701, 40,000 came from that. That is what I'm asking.
So on,
Only 2 of the 5, so it doesn't really answer the question. And I just want some help on that because I have been asking that question for several months. So thank you.
so on my staff report, it has a breakdown of payments by fund. Page 1. And then the backup, there are 3 generated reports from OpenGov.
I'm sorry, sir, but are you able to bring that up?
I can bring it up right now,
Thank you.
even though this is not on the agenda.
Okay. And while he's doing that, also, we did address the backfilling for finance, which was your other point. Okay. While you're looking that up, Tony, are there any comments, questions from the public online? I got rid of the interfering thing, so I should see hands, but I don't. So, okay, we'll assume not. So while you find that, we can then bring it back to the committee here for the discussion questions. Oh, read it again. Yes. Head up to the mic so people can hear you.
I'm sorry. For the salaries on the spreadsheet that he showed, it showed like we're only using 84% of that budget. But with these new positions, so we're not really saving anything because we're shorthanded in the office. And with those new positions, it would probably add on about $500,000 that we don't have. And that would be a new finance director, a person, new building person, another analyst for the finance department. Those will probably add up to about $500,000 that we don't have. And question is, in our contract with Good City or one of the other contractors, building contractors we have, do we have a clause that says after the person has worked X amount of hours that we can then convert them to full-time employees? for a small fee, because we're just throwing money out there. I forgot how much they were last month. I believe they were $50,000 in the warrant list from last week. That's $50,000, but then we're losing that brain trust that we paid for. And a lot of contractor contracts do have those type of clauses in there if you're using the contractor over a long period of time. And so for a small fee, and it reduces over the years, how much you'd have to pay in that fee to convert them. And last thing is that I'm glad to see that the number for fines has increased, because the one that was presented to the public a few weeks ago, it showed it was next to nothing. And so today it showed that it was over $10,000 actual. But, you know, that was a comment from, not just from me, but during that presentation, there were people that were questioning. There's things that people have put on the forum about an issue, or, you know, so for that to be next to very low amounts for fines when we actually need money, or people aren't acting right. Not that we want to go search and, you know, fine our neighbors because they have a problem, but there are times that the town has fined people for wiping out 80 trees. I can't remember his name, but, or other things. But then there was no money in those, and we have over, what, 1,750 homes and no fines or next to nothing. And so we're in need of revenue, and we want to be neighborly, but I'm sure that there are some issues. Thank you.
Thanks for the comments. Yeah, I certainly wouldn't agree that we should be driving enforcement based on finance. It should be based on people who do violations. I'm sure we all agree on that. In terms of adding the position to finance, I don't think it's a net add, right? In terms of, we had an assistant town manager.
We're just adding them to the salary schedule. They are not included in the budget.
Right, and the
Yes.
finance manager it's not a net add.
Right, but we're basically reducing the salary from the finance director level to the finance manager level.
Right, and you're now filling the open assistant town manager.
Yes.
Yeah,
Yes.
so it's not.
So it's not an increase in FTE.
Okay, so that's good.
And for some reason, the internet is not opening up.
Okay, well, then maybe could we take this offline in terms of the warrant?
Actually, I want to end this conversation because
Okay,
there's a lot of misunderstanding here.
yeah, and if you can't find it though, at this meeting, then if you could get it to me, I could get it to Rita and we could clear it up offline, or we can do it right now.
No, it's up now. Hold on.
Okay, great.
All right, so
This would make for very bad radio.
I have a face for radio.
Yeah, that's right. It's a good thing we're on video here. So it's not dead air. Here we go.
Okay.
Tony has it just in time for the commercial break.
Okay, so the first box breaks down the starting warrant number, ending warrant number, total number of warrants, total dollar amount of the warrants, and they'll be released. Payments by fund. Fund 701, 125,000, 329,000 was paid for out of that fund. All of that money was already collected. We have $1.2 million cash balance in that fund right now. The applicants prepay. And then we pay as the invoices come through. Then we also break down warrants that were paid through ACH. Then I disclosed about the sheriff's contract. What?
So if you come down to the top of 2 previous pages. So that's it. That's the one. And it shows where the funds came from, and it's a slash. It shows that out of the $250,000, the 5 contractor fees, there were only 2 of them that included a 701.
Because they were paid as ACHs, not as warrants. We didn't cut a check. We paid them through ACH. That's what that chart illustrates,
Okay, and so,
which it says warrants issued as ACH, like EFT.
okay, so out of the $250,000, then that's the only number that we got the money back for.
We had already collected.
Well, yeah, so it always already collected, but we pulled
Okay.
it from that bucket too.
So then here's the check register. And it shows you which ones are ACH, which ones are EFTs. And it breaks down 234,000 out of ACH, 1.2 million out of EFT. Then you have checks by fund. So if we go down to Fund 701. Yep. Cotton Shires, CSG Consultants, Good City, deposit refunds. Those were all paid out of Fund 701.
Okay, that was all out of the $250,000. Okay,
The 125,000 was paid out of Fund 701.
Tell me if I'm reading this right. The other number reference just referred to it coming out of the checking account. Is that right? Or being written? as a
Right, we
check?
either we either issue a check
Yes.
or we pay
So
them
that wasn't a
through-
fund reference. That's where it went into the account to
Right.
be paid out of
Right.
a check by a
and,
check.
and it states that in the report.
Yeah, got it.
so what
And
I
then-
see as the answer that for the question I asked, out of the $250,000, we received 125,000 back from things from other people, so it's half. Thank you.
No, anything paid out of Fund 701, we received in advance. So we received all of it.
Oh, yeah, yeah, but I'm saying that was what was owed to us. I see that as a separate bucket that just pays.
It's not owed to us. They've already prepaid it.
I understand that.
So we're just paying based on what they've given us.
I now have the answer to my question, and if we can answer the contractor one.
Some of our contractors do not have a no poaching clause. So if a position did come open and if a consultant were to apply for it, they would be eligible to be hired. But we don't have anything that automatically carries over because no consultant's going to agree to that. So,
Yeah, and I'm sure we're looking into the trade-off between hiring FTEs versus using consultants. Right, and yeah. Now back to general.
I have but I did have one data question because we didn't have the packet. So what's our reserve as a percentage of operating expenses?
well,
General. fund.
as the end of April, would be about 27%, 28.
All right.
I'm just doing that off the top of my head.
Yeah, I think you wrote it something like 30% in the packet somewhere.
Did I?
Yeah.
Okay. So 34? Okay. Oh, I used it against the current operating expenses, not the budget.
Yeah, but the packet wasn't through end of April. So since Tony was showing end of April. no.
Oh, yeah, fair
So I
point.
was
Yeah.
just checking in on the most recent. Thanks for that.
Yeah.
So
But that reserve is now gone. By the end of May, it will be going down.
So what do you forecast we'll be at by the end of the year in the report?
Oh, we'll still be above the 20% threshold.
And that's.
It's next fiscal year.
$500,000.
Yeah, the next fiscal year is going to be a big hit.
Okay. Thanks.
Because we did adopt the 263,000 deficit, knowing that we'd still be above 20%.
But we might not.
No, we'll be above
At a
20%.
at a deficit.
At the end of this, yeah, I mean, if things just suddenly dried up, yeah, but I mean, we're projecting the reserve to be above 20% by the end of this fiscal year.
Yeah.
It's just
Okay.
next fiscal year and the year after, we're
Yeah.
gonna go below. So
Understood. Yeah, thank you for that
Yeah.
update.
Yeah, I was,
he's pensive.
to the extent, if whatever we're pursuing in November doesn't pass, it looks like with reserves, we're good until end of fiscal year 28 to get to, well, I guess we'll break below the 20%. Does that include the fee study implementation, or does
Yes.
that give us a little bit more buffer?
That does include the fee study implementation.
Okay.
But
So-
if it doesn't pass, then the strategy is going to be, well, my recommendation is up to council, would be we have expense reductions in order to maintain our 20%
Okay.
threshold.
Got it. But if we weren't to make any cuts, we're good until the end of 28, give or take.
Yeah.
Yeah. And that gives us time to come up with a plan B, in theory.
Well, we need to be thinking about plan B if it doesn't go as, if we don't have a passage in November.
And this bleeds a bit into the next item, but I think it is the budget. So your assumption around the fee schedule is roughly what percentage recovery of costs? I mean, we're at a low number in most categories now, which we'll talk about in a moment in more detail. And we're not going to 100%, I would assume. And obviously that's up to council.
It's up to council. But in some categories, we're way like 27% cost recovery. But I think on average, maybe 70 to 75% cost recovery. And I mean, we can tier that in, or we can go full bore, or I mean, council's going to have many options to determine how to go.
Wouldn't that produce more than the $100,000 uplift that you're projecting?
75%
Yeah.
of current?
Yeah.
Mm,
When I read the report, and again, I'm kind of getting ahead of myself, but it's hard to edit this out.
I was thinking of the actual recovery rate, not necessarily the percentage of revenue. That's
Yeah,
what you're asking.
I was thinking the recovery rate too, but I just based on the report of the amount of money that wasn't being recovered, it seemed more substantial than that, unless I'm misreading it.
Right. So, yeah, it was like 1 something million.
Yeah.
Yeah. So 10% of that, be about 130. So 8 or 9% cost recovery. So for 100% or for $100,000.
Okay, but that's only 10-point increase, right?
Because yeah, I mean, it's because some of the costs are actually going to be going down too. So if you looked at some of our building and planning fees, they're going down. Some of our rental fees are going to be going down as well. So I think the net increase is going to be about 100,000.
Okay, well, that'll be great. We can talk
Yeah.
about that in a minute when we get chunk. I probably should have put that up front.
Yeah, it's not going to be but we need to show that we're right sizing our fees to the cost. Also that the fees that we're asking and implementing are legal and comply with state law, and that they're actually not taxes. So,
I apologize for this question in advance because it's going to illuminate that I'm not that an informed citizen right now. But in terms of where the town council moving forward, because I did read the budget update and it looks like everything was kind of tracking towards the town council recommending and proposing in the November ballot, the real estate transfer tax. Is that true, or is that not the case?
it's one of the options.
It's one of the options. And is the other option the parcel tax still? Or is it still also the UUT, like reallocation from open space?
Yeah, the direct, yeah. No. The UUT reallocation was not.
Okay. So it's
Considered,
just
yeah.
those two.
Yeah.
And then for the budget, the perspective, the numbers that you used for this forecast where we show that we get to the 20% by the end of fiscal year 2028, was that on the presumption that one or both of those pass?
That forecast does not include any either transfer tax or parcel tax. Yeah, that's basically static. If things stay the same, the keep that black line from going below the blue would require expense reductions.
Got it. Okay, thanks. And then just if the parcel or if the actually either tax, but really the transfer tax were to pass, I remember this is many years ago, there was a retroactive income tax in California. I think this was Prop 30 a long time ago that went all the way back to the beginning of the calendar year. If this were to pass, what would be the implementation date for new taxes moving forward?
The transfer tax would be January 1st of the next calendar year. And I believe the parcel tax would be the same.
Okay.
No. But I'd have to double check on that. Am I speaking correctly, Craig?
No, please, yeah. Mayor Taylor will illuminate us here.
So the council has directed staff to follow up on the real estate transfer tax. When we've looked at this, that seems like the most viable. We haven't actually made that final decision yet, but I would say at the moment, that is the general direction we're leaning. So I'm not speaking for the whole council. I mean, we will have to make that decision. And that's, as we go through the budget process and then as we're getting ready for the ballot, that's when we're going to have to make that decision. And in addition, we're going to have to think about, and Chris, and I know, Ken, you and I have talked about this. I mean, if we go with the real estate transfer tax, I mean, what number are we going to use? I think that's where we have to be particularly thoughtful if we go with that option. So I would say UUT is out. I mean, it's at least from my point of view, when we've talked about it, there's just not enough money there to fill the gaps. So that didn't seem realistic. So, I mean, you guys had done a great job of sort of, back, was a year ago now, maybe, 2 years ago. Okay, thanks, Stephen. Of basically enumerating different possibilities. And that was really helpful. And I think when we looked at it, we're sort of down to those two, but I would say real estate transfer tax is the one that we've been leaning most heavily into, if that's helpful. So, but again, we're still open to discussion on this particular topic. Does that help?
That
Thank
does
you.
help. Thank you very much. Appreciate it.
So I have a general question that ties this all together. The chart you showed us, well, not today, but you sent out earlier, showed a $700,000 deficit going off into the future and therefore 20% and eventually having negative money left. But also I read in a report, I think that came from the town council meeting that said we were looking perhaps to raise us somewheres in the range of, I think it was said $2 to $2.5 million. And I'm just trying to understand, if we're $700,000 short each year, why do we need $2.5 million to fill that hole?
Well, the 700,000 is based on current levels. There are other needs that need to be funded. For example, the storm drain master plan, that's going to be at least 500,000. We have other service levels that need to be addressed in order to provide the services that the town needs. And, that's also going to require people. But we also have some capital improvement plans that need to have some funding that comes from the general fund as well. So it's we're looking to enhance services as well, because the service levels we currently provide, it's not adequate. We're barely getting by as it is with the current staffing levels, and the staff is at capacity or beyond capacity in regards to bandwidth of everything that needs to be done. Just the annual reporting requirements from finance alone. I mean, we're a small city, but we still have the same obligations that big cities have, and big cities that have staff of 15, 20 people in their finance department can do all this. We only have 3. And it's, we need to enhance our services. And so that's part of why we need the additional revenue on top of the 700,000 just to keep pace with the sheriff's contract.
Well, I think it would be really valuable to have a spreadsheet that starts with $700,000. And then you add these things and you subtract things because we also get increases. Mark's comment about AI providing some services. That would be very useful, I think, as an educational process, not only for this committee, but the town council and the residents as well.
Okay. Yeah, we'll be having that conversation in July.
Yes, that ties back to the budget conversation. Are you ready? I'm just curious, what's our schedule for a budget since new budget starts July 1st and we're at mid.
Right. So the first meeting in June will be the council's first look at, here's what's being proposed. They'll give them the opportunity to weigh in and give more direction in regards to what the FTE, authorized FTE levels are, what some of the priorities are going to be. And then the second meeting in June will be adoption.
So are you going to ask for help from the finance committee prior to the meeting with town council?
Well, if we have another meeting in June, if we have,
We can.
if we have we should have the financial statements back done by then. So we can have, but nothing's really changed in regards to the budget since the last meeting that we had when I did the mid-year budget update. The big elephant in the room is the sheriff's contract and the impact it's having on the general fund. But absolutely, we can review what's being proposed, the finance committee in June prior to, that's if I have the audit the financial statements by then.
Yep. And for those online, Mayor Taylor was pointing out that for us to provide useful input on the budget, we'd have to meet again before the 10th of June.
Well, we'd have to meet before the staff report will be due.
It's not gonna happen.
Yeah, we'd have to meet before the 3rd.
So like in 2 weeks?
Yeah.
Okay.
Look, I'm not trying to make work for everybody, but I think it's within our charter and I'm just trying to be a responsible member of this committee. And if the town council wants to proceed without our input, that's the choice that can be made. So, but I think last year we were very involved,
Right. And
providing feedback that
right.
hopefully helped shape some things and gave some input to town council. So again,
Yeah.
I'm just asking because.
And that feedback from last year is still driving this year's budget as well.
Yeah, I agree.
Yeah.
I mean, that's what went into the budget.
Yeah.
So,
Would,
yeah.
would we be able to review the audit at that time as well?
I will have to see I'll have to check with the auditor, but I mean, it's going to require me to get the MD&A back to them within the next couple of days. And I also have 4 staff reports due for the next meeting.
Got it. Well, whether or not the audit is ready, if the other members have the time, it might be useful to get together on the 1st or 2nd to have a look and see what we have to say. I mean, it sounds like it's a steady continuation from where we are, but might be good to look at. Does anyone have comments on that?
I would just echo exactly what Chris said, is that really the only two specific duties of this Advisory Committee are to provide a recommendation to the town council for one, the annual budget, and two, a review of the audit. That's it. Everything else is kind of at the request of the town council, but the only two that are specified for the committee are exactly that. So I think that it would be, I mean, it would just be fulfilling what the charter of the committee would be. And to the extent that we can reflect a bit back on last year, it was a vigorous discussion where the committee actually did not recommend a balanced budget. In fact, we recommended a deficit budget. It was with a lot of, frankly, hand-wringing and consternation in part by me. But it is something that it would be helpful to re-examine that question as to what recommendation the finance committee has for the town council for the upcoming budget for the fiscal year as to whether it's a balanced budget or a deficit budget.
Assuming everybody's in favor, is Tuesday, same time and place good, or is Monday better? How do people feel about that?
So June 1st or June 2nd.
Right. Okay, yeah, I've got this thing. Is Monday the first work for people? So we can select that. Is that doable for you, Tony?
So what happened to June 2nd? I thought you proposed Tuesday. Is that just?
I said Tuesday or Monday, and people could either make either, or if the first was marginally better for Stephen, it is for me as well. I can make Tuesday work if that's preferable.
Tuesday's preferred
Okay,
for me.
yeah,
But
Tuesday's preferred, but I can make it.
okay.
Tuesday's preferred. If it's Monday, I'll probably have to leave early.
Yeah, okay, well then let's make it Tuesday. And that gives an extra day of prep.
Thanks, George.
So we're meeting again on the 2nd at 4 p.m.
Well, it's a good thing I now live closer, so.
And consider that it'll get our arithmetic mean number of meetings back up after several months of that one. Okay, that's good. I will set that in motion and we will review the budget. And I think that's a good thing. And it'll give the public another opportunity beyond also looking at it at the town council to look at it as well with us. Alrighty. Anything else on this topic before we go to the fee schedule?
It's a quick comment. This may be news for the committee, but so one of the things that I know had been talked about previously regarding the new tax, whatever new tax the town council may be proposing to the voters in November, is that the real estate transfer tax. There's a statewide ballot initiative led by the Howard Jarvis Taxpayer Association. This is the same taxpayer association that put forward Prop 13 to begin with many years ago. They have just 2 weeks ago on May 4th did announce that they have successfully put on the ballot with enough ballot signatures what they are calling the Save Prop 13 ballot, which my reading of it, I'm not a lawyer, but I read these things really carefully, is that I think if that were to pass in the ballot measure statewide, that would invalidate the real estate transfer tax that is being contemplated.
Yeah, please, if you could help us. And for those online, Mayor Taylor is going to come up and tell us a bit more about that.
So Mark is generally correct. It is on the ballot. It's slightly more complicated that it depends on when you get your particular item on the ballots certified, how it takes effect. So if the Save 13 were to be certified first and our second, then we would be invalidated. If we're certified first, then it's good for 2 years, which is not great. I mean, that doesn't solve our problem. And there's some question about whether it's going to pass. I mean, I think unlike 13, it's kind of complicated what they're asking for. I mean, if you actually look at the the proposal that they've made, and then there's also stuff going on in Sacramento where people put these things on and then they negotiate and then they can take it off at the last minute. That's something they can do, I think, up until like August 7th. So even though you've qualified, you can take it. They have said so far that they have no interest in negotiating. So I don't know if that's a posture, negotiating position, or whether they're serious. So yeah, I think there's definitely a lot of unknown there for us. So thank you for bringing it up. I think that's.
So Craig, what is in that proposal that would invalidate?
Oh, so the proposal, the part of, and there's a number of things in there, but the part that's relevant to us is it would remove charter cities' ability to create a real estate transfer tax separate from the basically 0.5% that's sort of in the general city. So it would it effectively would invalidate what, if we go with the real estate transfer tax, what we're trying to
So
do.
that would apply to
All charter cities. It's going to be catastrophic to California if it passes, because we have big cities like, LA. There's some cities that depend on this money. So yeah, it's pretty catastrophic if it goes forward. But again, I don't think we know what the likelihood of it passing, but Mark is correct in terms of its potential impact.
Would this also affect parcel tax enactment, or is that somehow separate?
I believe that's separate, but I'm not sure. Now, I know for sure I can speak about the real estate transfer tax. I want to be careful about the parcel tax.
Okay.
So
Yeah, it certainly adds a new element of sort of almost public polling election game theory for the town council to consider, right? And all the rest of us, as you're trying to find a stabilizing measure for the town budget, and at the same time, there's potential.
Exactly. And what's been tough for us is we started as a low tax, back in the day before Prop 13, we were mostly volunteer government. So we got sort of 4% of property tax. Today, because we're so low, they actually have to round us up to the 7%, which is the minimum that they're allowed to give us. But just to be clear to everybody here, I think you guys probably already know this, but to anybody who's listening, we get 7 cents on every property tax dollar. So, that's why we're in this dilemma. Had we been spending more, had we not been fiscally frugal and been spending more, we would have more in our coffers today. So that's one of the frustrations here, is we're sort of being penalized for many, many years because we were frugal back in the day. So anyway.
Yeah, right. I've always been amazed that I think the Woodside Fire Protection District gets a much higher.
Significant, I think 17. Yeah, I think that's about right. I've actually got a graphic I've worked on of $1 that I'm going to present. So, and if you guys are willing, we're getting a little off the topic, but I'm working on a sort of a financial primer so that people can understand the finances of the town. And I would love to come present it to you guys and get your input on it. I think it would be, highly valuable.
That'd be great.
So, okay. Is there any other questions on this topic?
I was just going to actually respond to the question that George had, because when we were looking at these three options, UUT, parcel tax, charter city with the transfer tax, I ran the numbers at the time. So you may recall that one of the things about the parcel tax is that it required a supermajority of 2/3, that is still on the table. That can still be done, at least according to our collective understanding. If you wanted to fill a $1.5 million budget hole with about 1,700 parcels, that would be a parcel tax that would be required to be passed by the plebiscite of 2/3, and that would have to be at around $882 per parcel. Now that one, you has to be per parcel. You can't vary it. Then on the charter tax, one of the things that had been discussed both here at this committee as well as the town council is that one of the differences is that there was an interpretation that it needed only a simple majority. But in that particular case, assuming 40 sales per year, which is reasonably consistent with what we just talked about, that would be a tax of $37,500 per sale in order to meet that $1.5 million budget gap.
And I would add, since we're having this discussion, I want to keep you guys informed, is the council, we hired consultants to help us understand this. And their view is of our chance of being able to pass an $800 parcel tax was very low, which is also the reason why we haven't made a final decision, but why we were leaning into the real estate transfer. So that's, additional input that the council's taken into our thought process. Anything else I can answer? I'm here.
No, I think that's helpful. And I would imagine that consultants would be motivated by the fact that it's one thing on a parcel, on a transfer tax, that's a sale event when there's a lot of fees and people are coming into a lot of cash. So it's easier to pay tax on a transaction where hopefully you're making some money, and usually are.
George,
rather than every year.
there is a conservation committee meeting on Tuesday, the 2nd at 5:30.
5:30?
Yeah.
Oh, okay, on the 2nd. That's,
So
could we start at 3:30? Okay. All right, thank you for that. Excuse me, everyone, I'm just making sure I don't forget this. You'll be getting me very jet lagged because I'll be back from the UK. We're ready?
so 3:30.
3:30. Okay. All right. Are we ready to move on to the fee schedule? Sir? Okay. Great. Why don't we move on there? That was a very interesting read. I'll ask Tony to maybe summarize that for us, and then we'll follow the same procedure. Clarifying questions, hear from the public, and then the general sort of dive in.
So yeah, the fee study Matrix is the consulting group that does this. As I stated earlier, these are required to show that we're in compliance with state law, namely Prop 26. And I'm blanking on the other one, but there's been Prop 218, excuse me. So these propositions have kind of really restricted towns' abilities to assess user fees. So now it's, you can't assess this fee that's more than the cost that's being provided. Also, there's Prop 26 did put in some exemptions so that we can assess fees. Otherwise, any exaction is considered a tax. That's the wording of Prop 26. That was the first time a state proposition actually defined what a tax is in the state of California. So part of the process of when a town or a city undergoes a fiscal recovery, the first thing they do look at is look at the fees, do a fee study, and then make sure that the fees are commensurate with the service that's being provided. They're not more than the cost of the service that's being provided. So that's exactly what we've done. This is the report you've seen as a draft. We're still tinkering with it a little bit. But the final version will be going to council on the 27th, and then council will have the opportunity to review some policy decisions we made, in regards to cost recovery. What the plan is going to be. Is it, building and planning? Is it 100% or is it some type of hybrid? And then, because you also want to weigh, being in compliance or, because we don't want to create I think the term was create a black market for, people not coming in to get the required permit because it's too exorbitant. And so they go ahead and they do the work on their own outside of, but we don't know if that works up to code or if it's, legal or anything like that. So the process has been ongoing for several months. The consulting group met with, we had several meetings with each department, kind of refining what fees to consider, what agencies to look at in comparison, and then also to come up with some recommendations for proposed fees for 26, 27. And then also part of the policy then is on an ongoing basis, what's the methodology used to increase fees? Is it CPI? Is it some other metric? But again, that will also be at the discretion of council. So that is summary of the fee study, and I open it up for questions.
I have,
Multiple?
no, I have one question.
Yeah, clarifying questions first, and then we'll do discussion after the public. Yes.
I read the report, which I found to be very well written and very informative. So I think the people that you hired to do that did a good job. We were told when we asked this question, in the last year or so, as to the parking facility that the town supplies at the Alpine Inn. Now, that happens to be one of the few places where the town can charge more than the cost. It's only limited by market rates. And I did not see in the report, I could not find in the report, any information about the proposal for what should be charged to the Alpine Inn for the parking that we provide them, that the town provides.
Which is why we're pursuing a lease with Alpine Inn. But since it's not a lease, it's daily use, and therefore we can't charge more than what it makes to maintain that parking lot at the level that it is. So that is the actual use rate actually went up, I think, $11 to $118 per day. And that's because it is basically a dirt field, low maintenance. There's no electricity in the we're not vacuuming, we're not maintaining the structure in any way. That's for Ford Field, and it's the same with Rosati's. It's basically, we put down DG maybe 3 or 4 years ago, and that's been probably the only improvement the town has done. I know Alpine Inn has done improvements since then, but those two, we can use a market rate when it comes to when it's a lease. And we're currently in negotiations with Alpine Inn for a lease for those, to the use of those two properties.
So if it weren't a lease, what could you?
It would be $118 per day.
This seems wrong to me.
Yeah. Mayor Taylor's going to help us with the parking question too. I'm very glad you're here, by the way.
Yeah, I'm glad to be here. It's been a long day, but I am, no. Thanks, Chris. Yeah, so I think we all think, oh, that's like this really valuable real estate and they should be paying us a lot of money for that parking. Unfortunately, in order to charge them for that parking, we actually have to do a study that says, how much is the market rate for a dirt parking lot? That's the market rate. We're not allowed to say, oh, it's the dirt parking lot at Rosati's, and Rosati's is this great place and everybody wants to go there, so they'll pay more. So that's what, I mean, and we're looking into a study, but at least initially I don't think it's going to be this windfall that people are hoping for. We could choose to put parking meters in, like the town could make that decision, and then charge people, $1 an hour or $5 to park there or whatever. But unfortunately, I don't think we've seen anything so far in the preliminary that makes it like, oh, this is a windfall, and all our budgetary woes will be gone. So, I mean, I think we're going to continue to pursue it, but we also think that Alpine Inn is a great business in our town. So, it's finding that balance between being fair to them and being fair to the residents. So that's what we're looking into. I wish it was easier to get these numbers. I mean, figuring out market rate turns out to be, I don't want to say complicated, but you have to end up with consultants and they give you valuations and, do the usual. So
I'd like to recommend a way to do it. It'll cost virtually nothing and get you a good number.
Yeah.
Negotiate with the owners of the restaurant and tell them if we don't come to an agreement, we will not rent it. They cannot use the parking lot.
And
that'll tell you what it's
Lose a
worth,
third of
what the
our sales.
market value is to the user of the lot.
yeah, no, I appreciate your position. Thank
Right.
you.
But there's other considerations in regards to, there's restricted uses for that piece of property that does impact the appraised value.
Yeah, and I'm very sensitive to Craig's point about being fair to a business owner in the community, and a lot of people enjoy
And
that
they're
rate.
by far the largest sales tax generator for the town.
If I
By
could,
far.
I wish we could just annex the Rosewood Hotel, and then all our problems would be over.
Listen, on page 2 of the executive summary or something.
Mhm.
There's a comparison between revenue and full cost. So revenue, is that what we're getting now?
That's based on our current fees, yeah.
And full costs, well, that difference is like 1.8 million,
Right.
but you're only anticipating 100,000 more?
Well, some of those, hold on, let me bring it up.
Like I said, I look.
Yeah.
Yeah, Greg is going to come back up again so everyone can hear.
So I found that table confusing because it looks like, oh, that 1.8 million, if we just charge more fees, we'd get it all back. But that's not what it's saying. What it's saying is Public Works, their budget for the year is, what is it, 2 million, 2.3 million or something? I don't have it in front of me, so I'm just saying this from memory. But that's their entire budget. So that includes our fields, and that includes our salaries, and I mean, that includes everything. So some portion of that we're going to get back through fees, but we're not going to get 100, we're never going to get 100% of that back. I mean, unless you have some theoretical model that says they're working 100% of the time on other people's projects. Like that's the only possible way you'd ever get back 100%.
Mhm.
So that's why I say that when you look at those numbers, it looks like, oh, well, if we only had 1.8 million, we would have solved this problem when we're done. But that's, unfortunately, it's kind of two different, to me, it feels like apples and oranges. One's fees and one is actually how much is in our budget in terms of expenses for that department. So they're not.
That's a really helpful comment, because I had the same thing that I was trying very poorly to get at earlier with my question in the last segment, because I just read that before coming over here. I was thinking, well, problem solved, raise our fee recovery by 30 or 40%. But
yeah, the
it's
new fee
apples and
study,
oranges.
the new fee study would magically net us 1.8
Yeah,
million.
but-
Boy, we'd be golden. Yeah.
But not everything these employees are doing is a reimbursable service that can be charged. to anyone.
Exactly.
A
Exactly.
lot of public stuff they have to do.
So is there any, any computation which shows where the 100,000 comes from then? Like I said, I just looked at that now and went, whoa.
Right now, it's just basically an estimate, just based on activity, based on our current activity with proposed fees, that I'm estimating it to be about 100,000, but the actual drill down I haven't done that yet. But to echo what the mayor said, like, not every service provided by Public Works we can charge it to, like, say, an applicant, like we have with building and planning. I mean, there are certain costs that the town does that, like finance. I can't bill that to an applicant. Any type of administrative, HR, IT. We can allocate some IT costs, but and that's what we tried to do with this fee study, was what type of costs we can make reimbursable. But we're still doing that analysis.
Before we go too deeply into discussion, let me ask if the public has anything to say on the fee schedule. In the room, we have Rita. Okay, Rita, come on up.
I know that we get money every year from Ladera Oaks for that little piece of land that's part of Dorothy Ford Park. And it's a very low number. What was negotiated last was a very low number, and I know the reason why, but won't get into that right now. Have we thought about offering that to Ladera Oaks for sale? It's not clear that it's open space the way we've redefined in our beautiful town what is open space concerning Dorothy Ford Park. And that is the fenced-in area. I don't know how much that money would bring in. I know that contract is coming up for renewal. So that is a possibility. How much it's worth, or if it's been assessed to what it might be worth. but that's a suggestion. Thank you.
Yeah, thank you for that. That won't deal with structural year-on-year revenue, but again, if we can, every little bit helps, so.
We'd also have to comply with the Surplus Land Act to do that.
Oh, right. Yes, yet another law that we looked into a couple of years ago.
Yes.
Yeah, all right. Yeah, it's hard to do that. That's a great point. Anyone online with a hand up? I don't see anyone, so we'll bring it back here to the committee to have the full discussion.
So back to this. So before you do a final presentation, you'll prepare some,
Yeah, we'll have,
I read, I'm not a technical engineer or
Right.
anything, so it's like, I could just see revenue costs. I went,
yeah,
but what you're saying is not all that's that relevant to us. I mean, you can't recover all that cost. So
Right.
you'll come up with a,
right. I mean, but also understand that some fees are going to go down, some fees are going to go up. And then it's what's the current year activity.
right.
And then, so, I mean, I'm estimating the net's going to be about $100,000.
That's a big disappointment.
But I mean, the fees, the study itself was 45,000. So it's the fees, the study's being paid for, but that's one-time cost. But then moving future years, then it's, then again, it's all going to be based upon use.
So given that the full cost is not all that relevant as much as we hoped, and I understand why, was there an attempt or is there an attempt being made to identify kind of fully loaded allocated costs?
Yeah.
And do we know what those numbers are for these various components?
So they took our budget and then factored in all the, benefits, so we had fully loaded hourly costs for each employee and then factored in an overhead rate of 15%. Then also other supplies and materials. So, they did the full cost accounting methodology to come up with the full cost.
So can we have a table with that number rather than what's on page 2 here or whatever the page this is?
It's a pretty big spreadsheet.
But
it's.
can you then define it by building and code enforcement and planning and public works and show what the all-in fully loaded allocated cost is?
Well,
Categories.
Yeah.
Because then I think we get to where we're talking about, right? Where you can compare the revenue or the fee potential
Mhm.
with the actual. And then I imagine that'll be similar or at least directionally similar to what it would be if we were to outsource it to a third party, for example.
Mhm. Yeah, I'll see what I can do.
Or just maybe a question directed to you, but where we are now that the fee study is done, is there a process that we should consider to have the fee study be translated into a master fee schedule that then gets adopted by the town where the finance committee has an input, or is this purely for discussion? I'm just wondering where we might be in the process.
Yeah, my sense is this is for us to discuss and have opinions about. I think the experts provided the comparison. It's really up to the town council to make the trade-off to say, as some do, look, this is a reasonable cost recovery for this item, but not so much for that item because whatever reason, rationale, public service, public benefit, or not wanting to encourage people not to upgrade their equipment or something.
Well, related to that, we are paying the consultants and there's a great deal of information in here, right? Of our fees relative to others by every detailed category. Do the consultants give a recommendation because they've spent a bunch of time on this? I would think that maybe they would say,
Well,
or we would set the fee.
their purpose was, here's your full costs, here's the fee. But then it's the policy decision by council. Do you want to do full cost recovery, 50%? So.
Well, the other thing that's in the report though, is they do comps, right?
Right.
To other cities.
Right. So
they
they
have-
provide all the data for council to make the determination.
They don't make recommendations.
No.
We should have paid the 10% more.
We could dive into every line item and try to make a recommendation. I just don't think it's enough moving the needle, $100,000 a year. And someone has to do it. It's really the town council's job to set that policy. They're elected, and a lot of it comes down to just judgments of competing priorities. Like we want to make housing affordable and easy to get, and we just went through this whole Sturm und Drang around building more housing in town and ADUs and what have you. But if we raise the fees too high, that's a disincentive, albeit relatively minor in the scheme of total cost of building, but it's still real. Fees are a real thing that add up quickly. So that's something you have to balance. And everyone voted for the town council. So I think they do it.
And the consultants will be at the council meeting to kind of dive deeper into the methodology used to come up with the numbers that they have.
And George, I would agree with that with one perspective in addition, which is that from a purely financial point of view, and this is going to be obvious when I say it, is that the more we are as a collectively able to recover from the services that are allocated to an individual for a particular project, that yes, in the whole scheme of things, it ultimately benefits the town and our community, but really the purpose is for that particular building and planning project. I think from a financial point of view, the more you can recover, the better it'll be for the financial makeup of the town overall.
Yeah, and as state law recognizes, I agree with that. And it is also, if there's a project just for someone's private benefit, it's not an ADU that's helping the state achieve its goals and therefore not come down and take over zoning, say in Portola Valley, but it's just something specific for me. Well, clearly you don't want to tax people for that, but if there are real costs in assessing your plans and approving and inspecting your building site, well, then you could be liable for all of that. More discussion on fee schedule? Okay, I think this was a very productive update today. And we're going to get into the prospective stuff for next year in just a couple of weeks. Move to adjourn from anyone?
Just say one comment.
Of course.
So
yeah.
I think that we, as a finance committee, we may have overlooked the fact that actually Tony does have a new position. I think, at least I, for one, would like to congratulate him. Something that I've commented publicly as well as to individuals at the town council members of is that I personally think that the greatest risk that the town has from a financial point of view in terms of being able to get its budgets done, actually meet our obligations and get our audits up to date is Tony's unique position. I actually think to the extent that this motion and new title is reflective of the trust that he has earned by the town and the town council, I think that it's something that I would at least personally congratulate Tony.
Thank you, Mark. Here. I just want to, on behalf, I think, of all of us, echo that. And I spend a fair amount of time with Tony, and it's great that I'm not losing talking to Tony, and that he has even more responsibility here. I think it's a real indicator of us starting to right the ship here in town from a financial standpoint. And of course, as I've mentioned many different times, it would be very good if considering revenue measures wasn't necessary. And indeed, we've been lucky that we haven't had to do that in the last however many decades. But there are a lot of forces at play with state government pushing unfunded mandates onto everybody and running a deficit themselves. And what do you do if you don't want to go out of business as a small town? But anyway, that's just opinion here. Any move to adjourn at this point?
I'll move to adjourn.
Second? We are adjourned at 5:52. Thank you, everyone.